Good. You seeing us now?
Not yet.
So,
Okay. And we're live. Okay, so yeah. So we're live now from what I'm seeing.
yes. So we're live now. Everyone in the chat, please drop an emoji. Good night. If you can hear us clearly. Seven persons so far.
Mm-hmm.
Just waiting.
We've got a bunch of thumbs up there, so loud and clear. You're hearing us. Everybody's seeing Jody fixing her. Jodian fixing her here.
Minutes and then we'll begin. So here we go now. So good night, everyone. Thanks for joining us today. And in today's meeting, we have Chike, Vermey. I hope I pronounced your name properly. Properly, right?
That's right on the money. Good night, everyone.
Yes. So he's an IT professional and he is a value investor by heart. And he's someone who follows person like Warren Buffett and what other investor you follow?
Well, the persons they have the general value investors. So it's the teachings of Benjamin Graham. You have Warren Buffett, etc. John Bogle, who is the father of exchange traded funds, ETFs, basically. So yes, anything value investing. I'm a medium to long-term investor. And I invest in all securities, not just stocks. So it's a wide range of investments.
Okay, that's nice. And we have Jodian Aris, and she's a senior research analyst at a prominent investment company in Jamaica. Jodi, you want to introduce yourself?
Oh, sure. Hi, everyone. I'm Jodian Aris. I work in research, and I am I guess, conservative investor is probably the best way to describe it. Yeah.
Okay, nice. And I'm happy to have both of them today to share with us and give us some of their insights in today's happening in local and international market. And first question I want to ask, Jodi, what, in terms of the Ukraine and Russia conflict currently, what do you think are, I want to phrase the right way. So what will you think will be the long-term effects of this war on the market overall, international market?
So long term meaning how long you thinking long term is now?
Like within the next year to 2 year, in terms of inflation, oil prices and commodities, those type of things.
Okay. Well, I think things are very fluid at the moment. I think, we'd have seen things escalate, and to a point, I think recent discussion is like they're going to have some amount of ceasefire sort of talks. So if it is that we get to a point where it is not as long of a war as we probably had initially anticipated, then things may not be, as bad within a 2-year ban. However, if it is prolonged a little bit longer, so say, for example, these talks, doesn't result in something a little bit more amicable or somewhat of a ceasefire as would be intended, then you could see probably this continuing for a little bit more. And then that impact would be a little bit more sustained in a 1 to 2 year period. Because when it is that you consider factors such as inflation on the economy, it's not just an easy fix. I mean, the measures that a central bank would use take some amount of time to work through an economy. And as we mostly know, that prices are sticky downwards. So once they go up, it's not like, market conditions change and then prices drastically fall. Prices tend to remain at an elevated level for quite some time before it is that suppliers pass on to consumers. So it really depends on the length of time in which it takes, some sort of end or resolution comes to the Russia-Ukraine situation. So the longer that lasts, is the deepening of the impact that it will have on, economies internationally. If we're able to see a quick end to it, then, you may not see that sustain within the market over as long a period. So you could probably see it within a year in terms of overall impact. But the longer it goes, is the more sustained the impact would be.
That's a good one. I think I strongly agree with what you're saying. In terms of China, what do you think about China and the dollar in terms of it emerging as a new economy, global superpower?
Well, I think if it is that you look at what it is that they have mandates. I mean, I don't know if you're familiar with us in Jamaica, we have a 2030 plan. So, I mean, how it is that they have transformed their economy has really been through quite a bit of planning and implementation. So if it is that you're to look at the plans that they have, they have been quite successful so far in some of the plans. And it is that they intend to become, larger and in terms of impact, in terms of global growth, in terms of their impact on overall global growth. So, I mean, that is part of their overall plan. And, even though they would have revised their growth projections down for this year, they're still in plans, they're still working. You would see where they are making specific, infrastructure investments in, particular parts in regions of the world. And that is just a part of their plan. So if it is that you want to know exactly where they're going, I would say to read the plans that they have, because how they got to where they are was really based on the plans they had and how effective they have been in putting out or, following these plans, and they seem to be pretty effective. So whatever it is that they plan to do, it is very likely that they're going to work to achieve that.
Okay, that's okay. So anything you want to add to that, Chike?
I echo the same sentiments. With respect to the war that is taking place, President Biden this afternoon, I believe he had given the speech to let everybody know that they're planning for a long war. Seems that Mr. Putin is planning for a long war, and the longer, as Jodian said, this drags out, the more, it's going to be casualties on both sides, life and economically. I have chosen basically, in terms of looking on the war, while everything is impacted, because we're pretty much in a perfect storm, as you mentioned, China afterwards, and Jodian explained that you have the supply chain issue that we're still facing. A lot of that culminated around China and the ports. The last big squeeze was about just the locking down of one of their major ports, just because they had one or two cases of the coronavirus. And then that entirely put an entire hurt on the rest of the shipping supply lanes again. So this culmination of the war in Ukraine, the supply issue, and China doing what it's doing is basically a perfect storm of, as things drag out, it gets harder for everyone else who is dependent on these two countries. For, in the case of Russia, between them and Ukraine, they are what, 1/3 of the world's commodity of wheat and grain. And then they're also a big portion of oil for the main pipeline to Europe for oil. And then you have in China, everything basically is manufactured over there in terms of goods and well, goods primarily, right? Comes out from there. So the supply issue is a perfect squeeze for us as price takers of commodities and of products. So the war, longer it drags out for the main products of oil, gas prices should continue to go up unless persons, or should I say other countries, step in. For instance, Saudi Arabia, the bigger OPEC producing countries, actually step in and do something about it. Or the United States, their shale oil drillers come back to the market and they start to open up their tanks to basically put back that crunch on the supply that we're facing right now with oil. So we've gotten some reprieve. Currently, as you've seen, the gas prices have started to drop off. But I read an article today, I'm trying to remember if it was Fortune or Forbes that I saw it in. No, it was Business Insider. Their article believed that this is just temporary. But we'll have to see. It's really about the long game for this war and how long it drags out. So things, I believe, as we go on, will be up and down, right? We hope to get to the talks, but every single time they sit down to have talks, that being the Russian-Ukraine side, they sit down to have talks, it doesn't materialize into anything. The bombings are still going on. Today we have the World Court basically putting out that Russia must cease and desist their invasion of Ukraine. All of that is left to be seen. So, I mean, it's really up in the air. And to add to all of that, if we get to that point, as we have today, finally, the central bank or the Fed for the United States has finally made a move, and they decided that the American economy, they're going to start now putting their interest rates back into play and raising interest rates. They've done it by a raise of 25 basis points, which is basically 0.25% back onto the board. And they say they plan to do that for the rest of the year for about 6 times. So that also has me thinking as well to how will the market react to that? The market being the US market, and then the rest of the world market, because the US is one of the major suppliers of the world, right? So, our major trading partners of the world. So if they price all of that in from now, that can also have an effect on us coming down the line. So a lot of stuff like that is what I'm choosing to look on right now in that global economic sphere.
Yeah, and just to point out that, nobody really wins when you have a war. So if it is even that you look at, Russia, Ukraine, at the end of the day, both economies are going to suffer very much, even if it is that, Russia does get their desired output, they're still going to suffer in terms of the economy. So it's not really a case where in a war you have a great winner, really. It's just a winner, but not a material winner in terms of your economy can get some gains on it.
Yeah.
Yes. So, I was reading this article from Radar, and he was talking about the change in world order. So I was wondering if any of this has to do anything with it. But it just to continue and observe as the market go along. Also, any one of you track the Chinese stocks like Alibaba and those stocks?
I don't. I've tried to stay away from all things China, but it was mentioned in one of my groups today that Alibaba went up by 26%. So, but I am very not, it's not skeptical, but I'm hands off of China just because at any point in time, based on as Jodian pointed out, to understand China and where their economy is going, you need to understand their plan, right? What their leader has as their plan. At any point in time, based on how their regime is set up, they can step in and tell a company to stop doing what it's doing. They can remove persons who are the head of their companies, as you've clearly seen, where Jack Ma has basically taken a big step back in Alibaba Group. There is the other company, Tencent. Tencent is currently being fined by their I think is the equivalent of their FSC for whatever it is. I'm trying to remember now, but I saw that headline as well too. So I'm aware of what goes on with them, but I have an aversion to China just because at any point in time, I think the government has just too much control on the companies. And you're always walking this tightrope of at any point in time, if the company falls afoul of what the government wants, if somebody says the wrong thing, if the leader says the wrong thing, either people just get removed from the spotlight and next thing the company could fade into darkness, right, and be taken over. So, but they have a big impact on the world economy because they produce the product. So you have to at least know or try to understand how they will impact the rest of the world in terms of trade. You can't go around whether you want to invest in them or not. They will impact you at some point in time based on what they provide.
Yeah, precisely. Because I was all in Alibaba and then the stock shrink from last year up till today, since the announcement by the Chinese government that they would be trying to help the business and the market overall grow. Basically, that's what they were saying, and they will try to increase transparency into how they how they how they mitigate and watch the companies. So stock rose 34% today. So I think that's one of the factors to watch when we're looking into Chinese company and international companies. Um, regarding Amazon, eh, regarding Amazon, they had announced that they're going to do a stock split. I think it's in May, was it May? But they're going to do a stock split soon. What do you think about the overall company? Does this company has fuel to grow or much room to grow? What do you think?
I want Jodian to take that.
Right. So generally, in terms of stock pick, the stock split, I think once you have lower nominal values, it really encourages a little bit more activity in terms of market. So you may see quite, just based on the fact that the nominal value is lower. In terms of the company overall for Amazon, Amazon is, I guess, what you call now a very huge player in the market. I think Amazon has come in and changed quite a bit in terms of the landscape and how other retailers have been performing or how it is that they have been doing business. There is still some amount of scale from my point of view in terms of Amazon for growth. We know that they are moved within territory, within different countries, and so there's that big spread. But there is still quite a bit in terms of how it is that they do delivery in terms of cost cutting from that end that could also move towards the bottom line. I know in terms of Amazon Prime is I guess somewhat addictive to people. So once it is that know that they have been doing quite a bit of free trials to get people hooked. And so you will see a little bit more in terms of premium services that they will offer. That is, as they expand, they would offer a little bit more premium services, probably at a little bit higher rates that would stretch in terms of revenue income. But there is still a bit of more to be done. I know that they will, I guess, as big companies, they'll start to acquire a lot of smaller ones. And so you'll see that impacting in terms of how it is that their performance is. So, for me, I'd say yes, still a little bit more room for them.
So for me, with respect to Amazon, I did in preparation for the talk, I actually tried to look them up a bit. So for everybody who knows I like to be in the numbers. So pretty much looking at them, I mean, they've had steady growth over the years, right? Based on the charts that I've been looking at for them.
Want to share your chart?
Let me see if I can. 1 second. I'll pull it up. So this is a moment. Share screen. And I'm going to pull up what I was looking at. All right, so everybody, you should be seeing this. So let me see if I can get this to move. 1 moment. As soon as this goes away. All right. So I had them up, right? So Amazon of itself, well, we know today's price. So we have today's price at about 3,062. So if they were to split tomorrow, basically that at 20-1, you're looking at like $153 a share. So pretty much in terms of Amazon's history, you know, they've had pretty, in terms of stock price, right, where their high has been, they've been much higher in the years in terms of where they've come down to now, right? But not looking or focusing on the stock price, but focusing on the company of itself. I've liked what I saw with respect to their financials. So if we look at an overview of Amazon, this chart here basically deals with their annual earnings, right? It's their quarter, but in a quarterly setup. So this is Q1 2021, Q2 2021, Q3, then Q4. And then we have an expected earnings report to come out on the 28th of April for Q1 of 22. What you're looking at is all of the gray dots are basically the estimate. If it's positive, it's green. If it's negative, in terms of if they actually beat earnings, it's green. If they were under earnings speculation, it was red. Notice that pretty much they blew earnings out of the water for Q4 2021 when they reported. The gap is literally so large, right, for that compared to their prevailing, their 3 quarters before that. And there's no more than likely great expectation that based on everything that's going on, you have the fact that Amazon just recently increased their prices. Now, a company can only increase their prices and keep the same market share unless they have some kind of competitive power, or what I like to term, not me terming, but the term is that I've learned, economic moat, right? So it is more than likely an expectation that they should be able to beat these earnings again. We'll see. But not focusing on that, but focusing now on how they've actually been performing. Their income in terms of their revenue, this is a chart that is just a nice trend. It has continued to increase year on year. Now look at this. Here we are, 2020 is COVID that has hit everybody, and yet they're still in an upward trajectory, right? Their revenues in an upward trajectory against their net income basically is still moving upward, which gives them a profit margin that continues to increase, right? On the other side, on the flip side, when you look at their balance sheet situation at a high level basis, you see that they manage their debt pretty much in what would be a reasonable expected way, where their debt to their assets, they're bringing that down very nicely. And then they've basically kept all of their assets, their total assets, above their liabilities. So with respect to the financials of the company, and then the other big part as well too that I like to look on is cash flow. I really like to look on cash flow. That's very important to me. Their cash flow from operations has always been high and improved. I mean, it's coming down a bit now, but let's see what happens as the years go forward, because they've done certain moves that should set them up pretty nicely going forward into the future of itself, as Jodian had just said. So looking at how they've basically done their cash flow from operations growth, here you're having them doing stuff like this is 74% of cash flow from operations. They're doing 74% again. So they've basically, they had a drop off and then they've come right back up. Now, this is their 2021 period. We'd have to look to see why this happened. But I mean, based on everything in terms of the performance year on year, unless there's some kind of competitor that steps in to basically challenge Amazon in what they have as a firm grip of the e-commerce market, this technically would be a belief or an assumption, I should say. Let's make it that. an assumption that they should continue on doing just what they've been doing, right? So, I mean, right now, basically, the way how this is set up, I think the stock split, this is going to be their second stock split. The first one was in 1999. This is their second one. They do the stock split basically to get more trading of their stock and basically make it more attractive, affordable to new entry comers to the market, and also allow persons who already hold a number of shares to exit if they wanted to exit as well too. Because at a price of 3,062, that more than likely is a deterrent to basically to many investors to buy one share for that price. But at 153, even though the overall value of the company hasn't changed when they do the stock split. So for all those who are holding shares when they do it, their value hasn't changed. You still allow for newcomers to get a piece, and the expectation is that as the company keeps performing, the stock price will then start to move upward again, right? So I think it's a good thing. I like it. I see them, and it's a great opportunity for persons who want to buy into a solid company that clearly has a very solid economic moat, right, and firm grip on the competition or on the market. To own for the years to come, for many years to come, as a long-term investor.
Excellent. So yeah, I think it will become affordable for those who want to buy now, like for small investors, I should say. Yeah, because to really take, what's the price now? 3,000. Go back on the chart.
Yeah, it's 3,062.
Yeah, 3,062. It's quite heavy for a small investor, but with a stock split, the price will now become reachable. So you can maybe take a $30,000 now, or I'll say 150 US, and buy
153. Yeah.
153 US and buy one share of Amazon. Jody, what do you think about Massey? They also had a stock split. They are listed and recently cross-listed on the local market.
Yes. All right. So Massey, for me, I think what we find though is that when we have the cross listing, I think there's a little bit of lag on timing in terms of how it is. The shares are available on our side, and so you find that you have more of a demand supply sort of playing out, and so you realize that not in terms of it is that you look at the queue, particularly when it is that company's cross list, there aren't that many sellers, but you have way more buyers, and so it kind of gives a little bit of elevation in terms of the price. So I think once it is that we get a little bit better at the cross listing, probably we can work that variable a little bit better. I know we had the same situation where we had Guardian. In terms of stock split, similarly, when I think when it cross listed, it was about 1,000 something, and that's not normally the prices you see on our market. I think for quite a while it was really NCB that was heading towards 200, which would have been the pricey in nominal values. So when it is that there was a split now that brings it to $197, I think it was $97 initially when it split, it becomes a little bit more affordable. It looks like more what you see on the market, and so for retail investors, it's a little bit more attractive. So I feel like my $10,000 is stretching a little bit more in some ways, and I look at it from a nominal point of view. And so the splits are in that case was really good, because it would help in terms of the trading activity. So you would have seen it move, I think, from 97, and the end of the day was at 115 or somewhere there or higher. So you'd have seen that sort of movement that would have occurred just on the basis of split, because there's a little bit more interest. It seems cheaper to me, and so I'm going to run it and buy. But we still do have that same issue of the demand supply portion of it. So the queue, when you look at it, is not many sellers that are there, and so we still have that a little bit of a hanging. Overall though, Massey, in terms of a company, is a quite large conglomerate type of company. I think they're moving to rebrand themselves more as a financial holding company and not so much as a manufacturing company as it is normally perceived as, and it doubles in quite a bit of areas. So it is not just food, it is gas, there's auto portion, I think, to it as well. There is financial, and so it is a wide cross section of a conglomerate, as I said earlier. One of the good things. I think for more conservative investors, it is probably a little bit more of a way to go because of the size of it, and it's a steady, well-formed company. And so, it's really steady growth and not so much shocks. They'll just acquire companies over time and, pick up, divest some stuff here, and you get some benefits in terms of dividends here and there. So from a conservative investor, I think, Massey is not a bad option. If you are looking more for price appreciation and, company that is going to give a strong, growth performance, I don't think Massey is it. Just on the basis that it is at this point now a big and stable company. And so acquisitions are not going to happen every quarter. So you're not going to necessarily see that movement in terms of performance, revenue, and net profit, because you're not going to be acquiring new companies every quarter. So you see those a little bit more, and they will divest some, they'll acquire. And so it's just the nature of a giant type company. And so it's really steady growth as well as consistent dividend that you'll probably get from Massey.
Quite so.
Yeah.
So speaking of that, I want to buy both. If you could list like a top 3 stock that you
that there's no way we could do that. Well, I can't do that. That's for sure.
watch list. Give me a watch list. Like what you're watching.
Well, before we step off from that, I want to add to what Jodian was saying about Massey. Because so it depends on what the market is doing. When Massey gave, for those who watched their presentation, you had a company in truth that had multiple little companies all over the place that they had owned, that they basically owned. And what they've done is gotten lean and trim. They basically took those that were profit making, well run, etc. Everybody had to pitch why they should stick around, why they should still be under the arm of Massey. And basically at the end of the day, those who fit the bill were kept, those who weren't were basically removed, right? Now we have technically a lean and trim company, a conglomerate of sorts, holding company pretty much. When Massey hit the market, they hit the market at $2,700 odd, right? At their cross list. At least that's what I have in January for one of their price. 2,720 was one of their highest traded prices at the time. Now, the only company, as Jodian said, while there's NCBS Financial, and they were down, when they had their good run, they were up to what, 250? The only company in comparison to such a high stock price is Policy Amusement. There's nobody that was there.
I forgot them, sorry.
Right. So that kind of egregious 2,000 odd stock price is not flying on our market at all. I have observed that our investors, that just throws them off. Nobody wants to take part in that. So then we saw the price as we were getting close to the stock split, and as volume and so forth from the Trinidadian side started to come onto the market, we saw the price being pushed down because there was much more supply than there was demand. We got down to as low as 1950, I think it was, before the split, 1945 I have here. So 1945 was a last traded. And then we had the split. And now since that has happened, we've had the split, 197 come down, and now we've had as low as $99. So the market is still finding its way about Massey, and that personally, as a medium to long-term investor that wants a secure company that has the performance that does earnings, will pay consistent dividends, etc. As Jodian rightfully said, you can't look for them to do acquisitions every quarter and so forth. But acquisitions will come because they stated that one of the main factors or benefits they feel of coming to the Jamaica Stock Exchange was they have already engaged partners in the UK, Europe, etc., that want to invest with them, and it wasn't possible on the Trinidad Stock Exchange. So they're already looking to expose themselves. And there's a key thing that people need to remember as investors. When a company comes to the market, however they do it, whether it's cross-listing, APO, IPO, etc., they're coming for your money, and they're coming for your money as an investor one time. after they achieve what they achieve, that's it. They can't get money again unless they come back to the market in some way, shape, or form. Now the market goes out and determines what the price of they feel they should pay for the company. But that still doesn't change the fundamentals behind, is the company performing or not? Do they have constant earnings or not? Do they pay constant dividends or not? As it currently stands, if you take the fundamentals of Massey, they have a massively low, as they call it, price to earnings ratio. They have a very low price to book ratio. For the things that I like to look on when I calculate stuff, they're actually in a very good position as possibly being undervalued, right? And as we drive, as the market drives the stock price down even lower, they bring it down, they bring down those metrics even lower in terms of PE. They're gonna bring that PE down based on bringing the stock price down. They're gonna also bring down the price to book value, bringing the stock price down. But when the earnings come out, or when they put out their next financial report, I should say, all of those metrics get recalculated. And then we either find out that the company is really undervalued and a very good pickup. And that's where you might start to see the market decide that, oh, it's a bit more favorable and they want to buy it at, say, for instance, $95 if the market pushes it down to that, right? You also have the fact that the Trinidad market, because it's cross-listed, can step in at any time and push volume over there if they get the chance to. But in all honesty, it's a solid company fundamentally for me, based on what they've done, based on how they perform, based on their trajectory of where they want to go. So investors should wait accordingly. The market, what you see as price is, in my opinion, is not a direct correlation to who the company is and what they've done. The market just likes other stuff at some point sometimes. So that's really what it is. Right.
Yeah, just to remember also that, you know, the institutional players are not as heavy in the market currently. So, you know, quite a bit of, you know, what you're seeing is really driven by retail clients. And, you know, they are not necessarily as able as, you know, institutional investors to really buy at these, you know, volumes at these prices. And so because you're really looking at, you know, retail clients, you want to bring it to a price point that is a little bit more, you know, attractive to them. And so a stock split, you know, would have really been, you know, ideal, you know, and it worked. I mean, you can see where, you know, you see a little bit more in terms of movement, possibly, or trade volumes. I think on the day of the split, you know, quite a bit was traded, you know, so you would see where, you know, that would have had some impact.
Yeah. But I will do this for you, Lance. I'll lead with only this. We're not doing stock split. We're not doing stock picks. But in terms of watch, I said it before on our other channel on Learn, Grow, and Invest. For me personally as an investor, I watch what would be the particular industry that stands to gain the most from what is going on in the broadest sense of the economy of the world of itself, right? And that's why looking at just stocks alone for me is not something that I like doing. I take a broad view. The market currently, as we talked about, as you heard Jody mention, the institutional investors, the larger players, naturally, and I'm saying this based off of the fact of I didn't have to. I chose to do this Jamaica securities course, Jamaica Stock Exchange securities course, to actually learn a bit more about the entire market on a whole. It's basically said that when you're in a position like this currently where the economy is, market players, basically bigger market players, remove themselves from risky assets. Risky assets are normally stocks. They move themselves into areas of bonds, of treasury bills, of benchmark notes, which are government bonds, basically, etc. And we have been seeing just that. They've been doing just that. But there's great opportunity still in stocks, even though people, and we're fully aware, we should always admit, at least I would admit, that stocks is one of the riskiest things to be in if you don't know what you're doing. But there's areas that should see really good growth for companies that actually have been managing themselves well. And what areas I'm talking about, that I'm speaking about. For me personally, since this entire pandemic started, I've been looking at companies with cash, with good cash flows. And personally, I've been looking at the one thing that most people will never be able to do without. So we can't do without light, but we don't have access to JPS because they are not listed on the market as an actual publicly traded company for stock as yet. They have their preference shares, but nobody can buy that because nobody's really selling that like that so easily. So it's difficult to get their preference shares. What's the next thing though? We can't do without light and water and gas. And we can't do without food. And we have a number of food companies on our markets in terms of those who provide from bakeries, from those who deal with bakeries, manufactured goods, etc. and so forth. So personally, since this entire ordeal started, even more so when the Russia debacle broke out, the war in Ukraine broke out, I really did start to look on what would be impacted in terms of food price and how that would go. Because only two things happen at that point in time. The companies who are in the market, if they have good balance sheets, solid cash flow, they can afford to handle hurt in terms of the inflation that comes down, which is from the outside broader economy of the United States. And they can afford for a time to not pass that on to their customers. When they pass it on, because margins must be maintained, our profits must be maintained, etc. When they finally pass that on, people take a stock of what they can do without and can they find substitutes. For certain things, it's not easy to find a substitute, especially now you have a situation where the government has relaxed. Let's look at Jamaican government now. They have relaxed curfew measures even more. Face-to-face school has started back. All of the companies that have been doing distribution of baked good products and foods, I will name them because I've named them before. Honey Bun, Purity, etc. Regardless of what the company's financials look like, those companies basically, when they would have taken a hit from big things like schools being closed, etc., and children being at home, now with face-to-face schooling starting back, all of those programs start to ramp back up on all of the products, the baked good products they have. But at the same time, you must remember, we mentioned that the economy, we have a war going on. The things that are impacted is the commodities of wheat and grain. And what is that? That is basically a big part of baked goods. So we had an increase from Jamaica flour mills, which was what, 20% that went on. I don't know which Monday, was it this Monday or last week Monday, but one of the 2 Mondays they did it. And that is going to impact everybody, inclusive of the companies that are listed on the Jamaica Stock Exchange. But at the same time, still, there are some of those companies, and I always encourage everyone to go and look at their financials, that you will see that when you look on their books, across the board, revenue, balance sheets, cash flow, they're solid. Some of them are really solid. They've been doing their work really well. They're well managed, etc. You've seen Honey Bun has been in the papers. They've had what, a 44% increase in, was it their profits? I think it is. You just need to look and see. So for me, I like to follow what's going on with the economy and then look on the companies that are connected to that to stand to gain in some way from the economy. It could be gaining just because it's naturally good, or it could be gaining from, unfortunately, pain, right? So prices going up right about now, margins must be maintained. A good company that basically has their house in order, has cash flow, does not have to pass on prices. And as such, because they don't have to pass on prices, their goods are going to be at a more competitive level than others. So as such, you would find people, the consumer, would gravitate to them more if their goods are like the good. So that's how I view it, right? So for me personally, the industry I'm looking on right now, food. That's the one that I've been looking on from start.
Okay, excellent. So yeah, fair enough. You see, all right. So I want to point out that we're not like, at least we can't give financial advice. So Jody might be a financial advisor, or she might be licensed, but at this particular event, we cannot give advice because each investor is different. Because you have to think about suitability your financial goals, time horizon. So we're not giving any financial advice. So you can go out and speak with a financial advisor from any firm that you join. But Jody, do you have any particular industry that you prefer to follow or watch list? Are you?
Sure. I mean, I'll stick with the staples. I think, in our time of, crisis vision, there is definitely persons are going to stick with the staples. So that would always be a safe bet within times such as these. I think, there was mention that we are reopening, in terms of probably relaxation in terms of our COVID measures that have been spanning from 2020. So there are areas that you could look at that would benefit from a reopening. And, those companies probably on the market, the price point has not moved on the basis of, they're still in somewhat of a depressed state. So, if you're a little bit more a long-term outlook, then you can probably consider taking positions in companies that, probably have not already been priced in, reopening in areas. Then you can look at those. I think would be good for persons who are a little bit more, risky. You don't, you want to take a little bit of a play, but you still have a little bit of a long-term or medium-term outlook. You can go in now when it's low and, wait it out. Then you could look at those opportunities.
Okay, so I didn't say this, but please like and share, and I will be sharing my top 8 for the US and Jamaican market. Like my opinion, seeing investing from my eyes. So I'll be sharing those videos next week, but it wouldn't be financial advice, but I'll be sharing for sure how to invest in the US market and some stocks that I am looking into at the moment. And so all new investors could research, Jody. How do you think new investors could research? Any books you would suggest or so on?
Well, I think there is actually a section on the Jamaica Stock Exchange website that kind of outlines what is investing and investing in stocks is about. So I think that would be a good place to start in terms of just understanding the variables that exist, what it is that you're doing, what it means to own shares, just that sort of basic, I think would be a first step before it is that you start to read in terms of, understanding multiples and stuff like that. So I think that would be our first step, just understanding what it is and what it means to own, what it is that purchasing shares really means for you. To understand the different stages, whether it is, your secondary market or you're buying on primary, that sort of thing. Just having that understanding of what it is that I am doing. Sometimes when it is that you talk with people who invest, you really do get a vibe that, they're not so clear, as the difference between, equity investing versus, fixed income type of investing. So persons sometimes want to sell when, there is a uptick, to kind of reap some amount of gains, in a similar way how it is that you'd probably take your interest off from a fixed income sort of thing. So I think a good first basis is just to understand exactly what is, probably equity investing versus fixed income investing. And, understand you have to understand, what it is that you are interested in. So, you have to be a little bit self-aware, a lot of times people tend to come in and follow the market and then they get burned. And so, you have to have an understanding about you, where you are in life, how much of a risk you are willing to take. And so, whereas, I may be friends with somebody and I see they are doing well in terms of, they probably bought, a Fesco and, they're, smiling to the bank. But I may not be the type of person who's willing to take on that sort of risk. I may not be as patient in terms of, waiting to see price appreciation from the time I do an IPO. And so you have to have an understanding of self and what it is that you want, how much you can manage. Are you the type of person that's going to watch the stock price every day and cry? You have to get an understanding of you. I think another point in terms of new to investing is, I guess, also knowing your goals, what it is that you want to achieve. Is it that I have this cash and it's just nimble cash that, I wasn't using to anything and just want to put it somewhere and probably gain funds? Is it that I am interested in, I have a building I'm planning to purchase and I want to then use my gains from investing to make a particular purchase? And so you just have to understand in terms of goals that you would have. And I guess talking to people, watching videos, there's quite a bit of information that exists out there that you can follow, watch videos. I know that particularly Investopedia is very good at explaining, just the variables and the terms that people use and what is said. And to always know that once it is that you get into it, it's not just a game of gains. We'd love to talk about, price appreciation, but, things go the other way as well. And there is very likely that, when you start to invest, you're going to get some burn, you're going to end up buying the high. And, you're going to have that. And you're going to have to sometimes take a bit of a loss and, just call it a day and start over.
So you would invest in crypto then?
Yeah, you have to know yourself.
Yeah. Chike, any book you would suggest or would recommend? You are a value investor, so I guess the Intelligent Investor and Security.
Now there's well, the basis is persons now starting. Actually, I think the easiest thing that you can do actually is, besides books that you can read, there are many different groups and a lot of videos on YouTube, like exactly what you're doing right now, Lance. You have the Learn, Grow, Invest community as well too, in terms of Learn, Grow, Invest YouTube videos. We've done multiple ones. And you have the different groups on Twitter. So I'm a person that I read widely. I'm now at a point, when I started my investor journey, it was really, what did I start with? I started with a couple of high-level books that really hit it out the park. And funny enough, it wasn't The Intelligent Investor. That might have been my third book that I read, actually. But the first thing I wanted to really learn about was value investing in its sense. And how did I learn that? I learned that because, as I said, when my investment journey started, it wasn't about stock, actually. And it was a correlation that I found a book that was linked to to the fund that we were invested in, basically. I found a book by the person who ran the fund. And from there, when I read that book, I then went on to read other ones. So the first big thing is, as Jodian says, the first thing you're taught is you need to understand your investor profile. You need to understand what kind of risk you're willing to take. So before you run out and buy all these books, like The Intelligent Investor, etc., which is very high level, but I personally believe, and where I'm at, that The Intelligent Investor can get very complicated if you and it's long. It's a large book. They're very simple ones as well, so that you can actually read. There's a series on Amazon called the Little Book series. So like there's one, The Little Book of Value Investing, The Little Book of Investing like pros, pretty much. But to be very honest, I have found a lot of my information, or when I started, it was on YouTube. To be very honest, there were just persons that, there were persons that we picked. Like for instance, the Motley Fool group, right? They do a lot of videos and so forth. So I was following them, and they're one of the persons that I look on. I'm trying to remember the other group that I followed that started my entire journey, that they broke down for me how investing was from buying a share of a company. Basically, they broke it down to an ice cream stand, and then they explained and illustrated what book value was and how to do all those complex. It's not complex, it's simple math calculations. You just have to remember the formulas that are there. But a lot of things can be found in YouTube. There's different types of investing, as Jodian has said. You have the long-term investor. You have the person who does swing trading, is we buy on the low and we sell on the high. You have persons who just do technical analysis trading, which is basically they just look on the price and they start to do charts and so forth. Personally, I have decided to actually learn as much as I can. So I actually know technical analysis, because Unfortunately, it's so sad now that persons in Jamaica can no longer get a TD Ameritrade account. It used to be free for those who wanted to actually invest from Jamaica at one point in time. You could actually just go and sign up for TD Ameritrade account. The biggest thing for me in a TD Ameritrade account was that the TD Ameritrade itself provides a vast educational library of information, from actual podcasts to different seminars, etc. And it's all free. So when I wanted to learn technical analysis, I actually sat down in a 4-day course that they did, a technical analysis course that their chart, what they call their chart masters. Funny enough, those guys are actually pretty good. And I had a completely new outlook and understanding of technical analysis. Now you can find the same thing on YouTube, because the interesting thing is TD Ameritrade, they have the TD Ameritrade network. It's on YouTube every single day, and every single day outside of all of the stocks or whatever they're talking about, they do sessions where they teach you based on the topic that they're looking at. So if it's stocks and they're looking at technicals, they teach you how to enter a trade, exit a trade, etc. If it's a value investment company, they teach you how the company's book value is calculated. They're really actually insightful. So you're still not locked out. You can find a lot of your stuff on YouTube. That, for me, YouTube University is the biggest one. The second biggest one, or maybe it's the first, that Jodian mentioned as well too, Investopedia should be your first bookmark. Investopedia.com is your go-to dictionary for every single term that you will come across. And it is broken down with not only just an explanation in word, but a video always backs it up as well too. And an example backs it up to show you how it can be applied in real life, right? So for any investor that is now starting, you better get comfortable with firstly reading a lot, because that's what investing is about. You have to learn all of this stuff. And just like learning a language as well too, you can learn by following the groups. So I would say this: curate who you follow. If you plan to take investing seriously, whatever your goal is for investing, you need to follow news. You need to be aware of the financial news. I'm not talking general news anymore. Yes, you need to know general news, but financial news is what you need to dial into. So for Jamaica, you need to dial into the Business Observer. You can find that online. You need to dial into the RJR business side. They have a section for just that alone, right? Because I actually use a news curator that basically captures all of those feeds. And my news feeds are RJR Business, Gleaner Business, Observer Business. There's Business Suite Online. There is, of course, we're going to follow the Jamaica Stock Exchange. We're going to follow IC Insider. We're going to follow the companies as well too, for those who actually have they actually put their content online. So for instance, you have Mayberry does content online. You have Proven does some content online. Sagicor has their Investor Core site of itself, but I can't pull the information. So until they actually do it where they're doing news, you have JN Group as well that has their content as well in terms of companies and so forth. So you can find it, but you need to tune in to the investment space, as we would call it, basically, for that person, and read widely, focusing on the news about business. I'd like to give you a good example of this. And also too, if you can't do that, then you buy the papers, right? If you're buying the papers, you're buying an Observer, you're buying a Gleaner. The Friday Gleaner, is it? Correct me, Jodian, is the Friday one. The Friday one carries, and Julian, big up to Julian, is always putting this out. There is a stark difference between the papers on Friday, where you look at the regular paper on one side and you look on the business on the other side. And you notice it looks like two different worlds are taking place in Jamaica. Like one side is about all of the hardships that is going on and so forth. And then the other side, you're looking at which company made profit, which company is doing this, which company is doing a stock split or an acquisition. And you're wondering to yourself, hold on, but this side looks like it's just money and hardship going out the door. And this one looks like everything is just peachy. It's two different sides, and you need to filter out what is called the noise and filter to the side. To be a good investor, you need to filter to the side, which is you're intaking the business side, because what happens in the regular world doesn't move the business needle that easily, right? I've noticed that that was one of the first and most shocking things I noticed when I started following Bloomberg. I just sat down and watched Bloomberg for like a month. Only that, right? Instead of taking in any other kind of regular news. And it was during the Trump era. And what I recognized was, you see everything that you see on CNN, how they blow it out of proportion and it's for clicks and likes. On Bloomberg, unless it moved the needle in the financial market, nobody cared. It was like a blip. It came up and it went away in a matter of seconds. Jody can tell you how that looks on a Bloomberg terminal. Unless it moves the market, your regular news, what you see in regular news, is not business news. That market doesn't care about it. So you have to be very selective. So the first thing is a lot of reading, and it's easy to find those sources. They're out there. You just need to tune into. Next part is use YouTube, but use YouTube selectively in terms of anybody trying to sell you something and talk about, this is how everybody gives their opinions. Many are not licensed financial advisors, so they're not supposed to be doing that. But there's a lot of great tutorials out there. So YouTube is the next one. And the third one for reference is, again, as Jodian said, Investopedia. Bookmark that, right? Then you can start to get into the books. And the books are out there. The Intelligent Investor is the main one everybody knows. But I think one of the other biggest things as well, too, as we come back to investor profile, is you need to know how much money you have. So investing at $1 million is very different from investing at $10,000, right? And you also have to look on how much of that is your portfolio. What do I mean by that? So if you have $10,000, and that makes up basically the bulk of your of money that you have to invest, like it's 90%, you can't decide that you're just going to throw $10,000 in one stock without doing the requisite, checks and fundamentals and research. You're going to get burned, possibly, right? You also you could ride the hype and possibly you'll make it out alive, or you'll get a harsh lesson like I learned when I bought my first company myself, which was, and I put it out there last time. I bought Cable and Wireless when I thought that everything was going to be peachy with them being taken over by Liberty Global. I barely made it out. Luckily got $500 back when they decided to give back everybody their shares. But it was a lovely lesson. And with that, the lesson I learned, and I always echo every single time I talk, when I tell people about investing, I say, I follow one motto: do your homework. Because that's the only way you will know if this investment fits you, right? At the end of the day, once you do your homework, you're comfortable with what you're about to step into. The results, you just have to take it as it is. If it goes well for you, your homework worked out. If it went the other way, you need to recalibrate, go back to the drawing board and see what should have been done better. What did you miss? Maybe you missed some piece of news that wasn't there and you need to tune into some particular site that is carrying that particular news. Who knows? But do your homework. That's the last part. That's the last part for me.
Yeah, I mean, just remember that you're not going to catch every gain. Some stuff can miss you. So you may come in the market and somebody jump in an IPO, you never jump in, and it triple or 4 times. I mean, you're not going to get everything. Some stuff is just going to pass you by. Some you'll get, some you'll not get. And as Chike said, you likely will get burned. When you start, because you're anxious to step in before reading, and some of it is is a practical experience. You have to put it out there and try, and you think some stuff, and you think you may know a lot, and there's still a little bit more to learn. And so yeah, it's exciting stuff to be a part of, is what I would say.
I agree. I find being, I don't watch the market every day, but I find that just looking at the news is exciting. Investing is an exciting thing when you're not just focused on stock, you focus on how all of it works, right? And you see investors moving from one to the other, like people move into bonds, people move into treasury bills. People move into buying commodities, like persons are buying wheat or you're buying gold. Lance, you mentioned crypto. Well, I am actually a crypto investor. So, I mean, but again, you do your homework. Whenever I step into invest or thinking about investing in something, I'm one of those that more than likely will be late to the party all the time. But I also always follow one belief. I just need to be right once. That's the first thing. Secondly, there's never too late to be into the party, because there's everything you're taught that things move in cycles. Economies move in cycles, and every investment moves in cycles. It's basically being in the right place at the right time. And most of the time for that, it is about your time in the market and not trying to time the market. That is your biggest advantage.
Yeah, some excellent stuff was just said. So another point is that not because the last IPO sold off and the price is shooting through the roof, mean that the next one will be the same. So that's called fear of missing out. So do your homework. So one of the things about investing is that it's a lifestyle. So it's not just about the money. So say I'm a pharmacist. I can follow the pharmaceutical industry because I have a greater understanding of that industry. That could be my circle of competence, as Warren Buffett would state it. So anyone can learn investing. It's a simple process. It's a simple thing. It's just all about reading. Reading is the main thing. Once you read, that's it. Once you are able to learn and just read, that's it basically. So we have one question and I want to look at it and we're going to see. So Rowan Francis asks, how do you see the exogenous shocks affecting Jamaica, and how is our market positioned to grow? Anyone want to take that question? Joey?
So I think in terms of the exogenous shocks, I mean, because how it is that we are as an economy, we're not really a standalone. And so we're quite an open economy. So anything that happens on the global markets will have some impact on us. Particularly in this situation where it is that you look at your Ukraine, Russia situation, commodities are a big part of it, and we don't produce, any of these commodities, and we are pretty much price takers. So they're going to have quite a bit of a big impact. So as we have been seeing in terms of prices, and I think inflation came out for Jamaica and it was 10.7 or something like that for February. So it's going to have impact. And so when you think of the listed companies, they're also going to be facing these same higher costs that you face. So in the same way that your light bill is going up, they're paying more for energy as well. They're paying more for water and any other resources that they may use. So it's going to also have an impact in terms of how it is that they perform. And for those companies that are selling these products, so for some point they have to, because of as a business, they will be passing on, this higher input costs to you as consumers, but they may try as best as possible to somewhat not pass it on right away. And so you may see that these companies may take a little bit of a hit one quarter and then they rebound the next quarter because they have to eventually pass on. And so, we have been impacted largely by these, external shocks, and it will continue as the shocks intensify, or if they lessen, then we'll see, that somewhat of an improvement. And if you look at like supply chains, you have been seeing for most of those retail companies that are listed that they have been reporting that because of the supply chain issues that existed with COVID, which was external to us, it would have had some impact. So I think the big play for companies this year is really how best you can manage your expenses, and not so much in terms of how well it is that you can, push your top line, because, individuals are going to be a little bit more restrained in terms of discretionary spending, because you're going to pay, the pay is not going to jump by inflation 10% right away. I think for most persons, would have done budgeting or pay increase negotiations last year, would have been using the 4 to 6% inflation marker. And so we're out of that wind right now. And so your salary is going to stay, at this position for a little while, your basic needs and wants are going to rise. So in terms of discretionary, persons may not be buying, as much. So if you look probably at a broilers, yes, I may still buy chicken, but am I going to still do the processed ham slices and those things? Maybe not, I don't have it. I just go pay the extra for chicken. So there may be some products that get a little bit, that are more premium or a little bit more fancy, that may get a little bit of a cut. So it's about how these companies are going to be efficient and manage expenses, and how best they can do that to protect bottom line. I hope that answers your question, Ron.
You just said that read the entire question.
Well, so the entire question, and I don't know if you could actually genuinely make an assumption that it would be clear and a clear assumption. So Jodian, the entire question was this. He was actually saying the global markets with inflationary periods, we have trillions of dollars globally in pension funds that need to move out of bonds into equity to withstand inflationary tax on portfolios. But with all asset classes overvalued, at least that's his opinion, and an imminent rise in the US dollar because of shocks in the energy markets now, how do we see these exogenous shocks affecting Jamaica? So, looking at the first part, Ron must remember that pension funds are limited to where they can go in, what they can enter.
Yeah, they have markers.
First thing, right? Right. So they can't just jump in and out of everything. Additionally, too, this is a large amount of capital. So, like institutional investors, etc., it's not moving 10,000 shares. It's moving millions. And that's that kind of volume you just don't get in and get out of. Additionally, too, they are also extremely conservative. They are about protecting, because it's people's money at the end of the day that is supposed to go to pay for their livelihood living after they reached a retirement age, right? For the pension funds. So they're not going to take certain risks like that. But as you say, and rightfully, when you think of pension funds, Ron, you must remember this. That was one of my first investments in there. That's where I started to understand from. They take an extreme long-term view on things, and that's just because of they understand economies and cycles. So if you're looking to see that a pension fund is going to move out just because the economy took a dip, and they're going to go into something as risky as stocks because you believe that it might be undervalued. No, they're not. And even if they did go into a particular stock, if they were given that kind of leeway, they're still going to pick something that is fundamentally sound for them, that has had years of proven track record in terms of performance. They're not just going to step in like that. So presently, how I see the inflation, everything that is currently happening, and for them, they're going to take the long view. They more than likely they'll just ride it out accordingly. They'll go into safer waters if they want to, if they wish to. They're always going to find safer waters. That's what they've done. You have to think on a bigger picture that as a large institutional investor, as a pension fund, first order of business, protect the principal, protect the capital. So they're not going to take risks like that.
No, I mean, and just to add that, as you said, they're in there for a long-term horizon, and institutional investors also keep in mind their impact on market activity. So I mean, they're not going to want to be the institutional investor that is known for selling down the market in any way, shape, or form. And if it is that you look at how it is that the queues are, particularly on a local space, there isn't that great of a volume from a retail side to really supply an institutional investor. So you really would need two institutional investors on, one on each side to really kind of balance things out. So it's not so much that, they, even if it is that they wanted to say, exit one space and go into the next space, there isn't necessarily that volume, particularly on the equity side, that would allow for something like that to take place. And we'd have seen where if it is that they would have, probably deviated from mandate and was starting to do a little bit more risky, when 2020 would have hit and the markets would have fell every institutional investor would have then, realigned and they would have went to safety. And so they're still in that sort of position. So they're just continuing to roll into, let's stay on the safe side of water. So they took quite a big hit in 2020. And so they're just positioned themselves, as things are taking change, they're really more of a hold back, wait and see. We're in it for the long game. We don't necessarily have to do all of the realignment that we need to do right away.
I'm seeing where the questions are being deleted. I'm not sure about. I didn't delete them, so I don't know.
Yeah.
I will have to.
I wonder if you removed it, but I hope we answered. I hope we answered this question.
Yes.
The question of it in its entirety, because you can't look on institutions. You can't look on pension funds in the same way as a regular investor. They're not the same. They won't take the same outlook or view, and they won't do the same moves either. It's two different things.
Yes. Yes, and I wouldn't think it would affect Jamaica that maybe US market more, but overall though, the economy is gonna get a shock in terms of rising prices for the everyday consumer. Everyone gonna feel it. In the gas price, you're gonna feel it, in the flour, in the commodities. So yes, some companies will face some struggle on their margins, or they'll get a fight on the margin, especially like the bakery, like you say, like Honey Bun, you mentioned, great company, great growth, but now they have to pay more for their flour, which is one of their main ingredients. Some companies know, like those who are more service oriented, they will be least likely to be affected by oil prices. So those companies will face less. So pricing power is very
necessarily
important.
in a landscape. I think when you think of services, you may need more movement, and they're going to have to. They need a little bit of oil.
Yeah, but it's not a main. It's not a main
impact as well on services. So if you transport services, then you're definitely going to feel that.
Yeah.
Surge.
Yeah, I should specify. So it depends on the services. Like a bank, no, I don't think a bank would be affected as much. Maybe on remittance side, if it's a big conglomerate, you know that the US market contribute a lot of remittance to Jamaica. So I guess this question will have to be looked into more detail also, yeah, to see the impact. So, all right, one more question, and then I will see you conclude. A question to Chike. What is your overall outlook on the crypto market? Are you bullish or bearish?
We can actually answer this. The crypto market, if you've been looking in the crypto market, is a long-term view. Again, just the same thing. Every day there is a new cryptocurrency that comes out. The fact of the matter is this: take a zoom out of the market. Crypto is still not accepted in certain areas. We're still learning about it. It's still in its infancy, etc. But it is being more and more adopted. Also, by financial institutions, there's more talk and an actual growing proper conversation now about how to treat cryptocurrencies and how institutions can invest in cryptocurrencies accordingly. I've actually sat down in a meeting that had to deal with FATF, as they call it, Financial Action Task. There's a task force, correct me, Jodian, if I'm wrong, it's Financial Action Task Force, FATF, right? Or FATF. What FATF is the acronym, FATF.
Mm-hmm.
And it was basically about how banks can adopt crypto, right? And they went through a very intricate discussion, about how it was to be done, or could be done, I should say. In the years to come, every single company, I should say this: if you think that crypto is going to die tomorrow, just look on what the bigger companies are doing. Let's take Goldman Sachs. They have a crypto floor. They never had one. When Jamie Dimon had talked about crypto, the first part, I think he would say that he would fire anybody that was inside of his founding his trading crypto. Now they have a crypto desk of itself because investors will get what investors want, whether or not the institution wants to supply it to them. So they can't ignore it. So in summary, and long story short, I'm bullish on crypto long term, right? But I should say this with a grave warning. Crypto, if stocks was your riskiest thing, crypto is extremely risky because one, it has no fundamental value whatsoever. You can't price it like a company. You don't know. You actually have to find out the use case of the particular crypto, the coin, the underlying blockchain. So you might jump into one, but again, you need to do your homework. There is what you call the white paper for cryptocurrency. Every coin must have a white paper. I would term that basically then as the fundamental of the particular coin, right? You have to read the white paper and understand the use case of the coin. If you're buying things on hype, I personally say stay away from meme coins. So no dodge, no that kind of funny stuff. You're gonna get burned, right? Badly, actually. And the next part is that unlike everything has volatility, but crypto has extreme volatility. Just as nice as how you could be up 400%, you could be in the red real quickly, and your loss is going to be a real loss. Like literally, at least with a stock, unless the company goes bankrupt, you stand to get it back or get back something, right? If a crypto coin they call them rug pulls, if it just ups and dies, it literally can die in a night because it never had any use case or anything. You lost all your money. So to all crypto investors, understand what you're getting into, read your white papers, take a very long-term view with crypto, flat out, and for that, if you have a long-term view, you can have more confidence, investor confidence that, it's something that as you go along, you learn the wave. And also don't subscribe to FOMO. There's always a chance to step into a market or a security, right? If you miss one train, there's another one pulling into the station maybe tomorrow, 2 weeks from now. It's just to be prepared and be ready. So yeah, that's it for that.
All right. That was well said. Well answered. So I'm thankful for having my guests tonight, my two guests. Any conclusions, guys?
Take it away, Jodian.
I think one of the things I heard today was, we're in the middle of history.
Mm-hmm.
You have to watch, things are very fluid. I think when you think of how we started the year, I know I was looking at something and I was like, that was February. It just seems so far away, just on the basis of how much is happening. So there are quite a bit of variables playing out. As an investor, you have to be, reading and being up to date and being prepared to take up opportunities as much as, things are going downhill in some ways. There's always some amount of opportunity that exists. And so you need to be, make yourself prepared to take on those opportunities. And, just continue to watch what's happening. It's quite a bit that is unfolding and, things are changing quite constantly. So, keep your eye open, you have to be a little bit faster in terms of reaction, a little bit particularly, in terms of, how everything is moving. And so just be prepared.
Okay, nice. So Rowan was I just got this message. So he's actually talking about the rebalancing of the portfolios in pension funds. But for the average person, I don't think they will be able to relate to this question. So we might have to look at this bit more in the future. In terms now, let's see if I have any more questions. Given current market value. All right, so it was nice having Chike and Jodian on today's live. It's good to hear from other investors and their insights, because everyone is different. Everyone has a different style of investing. Some persons prefer different industries, some person prefer different stocks. So it's always a pleasure to hear from two great investors. So thanks to everyone who watch, and hope you stay tuned, subscribe, and like and share. Have a good night.
All right, everyone. Take care.
Good night.
Yeah.
Thanks, Lance. Thanks.
Thanks, Lance. Thanks,
All right.
Jodian.
Take care.
Right.